Welcome to the What It Takes podcast, where we talk to successful entrepreneurs, leaders, and CEOs across different industries. I'm your host, Darren, and in each episode, we're going to figure out how they got through difficult times, but most importantly, what it really takes to succeed. So whether you're just starting out your career or you're looking to level up your business game, my goal is to give you real insights and practical lessons from people who have achieved what you want. Welcome to the What It Takes podcast. This is a podcast where we interview executives and leaders in the real estate industry to talk to them about their journey, how they made it, what it takes to become successful. And for today, my first guest is Shree Kulkarni. Shree, why don't you give yourself a little introduction?
Yeah. Hey, nice to meet everyone. My name is Shree Kulkarni. And just a little bit of a background introduction on me. So, grew up in Indiana, went to school at Purdue University. I'm a chemical engineer by trade, went to law school at Ohio State, graduated, took the bar in Indiana. And the whole goal for me was to do patent law. But fortunately or unfortunately, found myself in real estate in 2007, 2008. And I'm super excited to be on your podcast, Aaron. Thanks for inviting me. Look forward to chatting today.
Likewise, Ben, and really appreciate you coming on as a guest today. Thank you very much. As a matter of fact, you are again our first guest, so this is very exciting for me as well. So, Shree, let's talk a little bit about your journey. So, you obviously started your journey or your career in the real estate industry right before the crash in 2008. Can you talk us through a little bit more about what that experience was like for you, and how did it shape your approach when it comes to the industry moving forward?
Yeah. So I guess it's important to know sort of who we are, what we do now, and then I'll get to your question. So basically, we're an opportunistic developer. We look at all kinds of asset classes. We're very comfortable with land, but I've done single tenant net lease investments to apartment buildings to small industrial. There's probably two or three asset classes we haven't done. We've not done bulk. We're
Mhm.
looking to try to get into the hotel business, but we haven't done a hotel. But for the most part, we'll look at almost any asset class or product type to try to get into. So yeah, how did it affect my view of the world? So I think that if you've started in real estate post 2008 or the Great Recession, and now again, I'm 44 years old, so there's an entire generation of people who haven't really experienced that. I think my I think my risk tolerance is different. I just think having seen the doldrums and like the depths of pain produces some fear in me that makes me say no to deals that I probably could have done and made money on. But like in particular, that's been really hard. But I will tell you too, it also forges a lot of really fascinating personality characteristics. Like you end up feeling like you can do anything because you've made it
Mm.
through probably the worst 3, 4, 5 years that one can imagine in the business. So, like all things in life, good and bad, yin and yang.
Mm. That's incredible, man. And yeah, because we did have a conversation as well before, and you mentioned about your background. You spoke to us a little bit about um, your degree as well, because you do have quite a diverse educational background, correct? You did engineering and then you did law. So, how have these disciplines influenced your real estate career, especially in how you approach risk and generally deals?
Yeah. So the engineering part, I don't know so much. Like obviously, it teaches you how to think going through college and making friends, and I don't know, like all the soft skills has been important.
Hmm.
I'm pretty good at math, so being good at math is helpful. It's not the end all be all, but it's helpful. The legal side has been profound to me, right? So for probably two or three dimensions, the most important is that I'm able to understand, generally speaking, the legal risk of a deal. That doesn't mean that I'm the expert in all the laws right now because I'm not. But
Hmm.
you can't put one over me, right? You can't tell me that something will or won't happen that is material to my deal without me having some sense of whether that's true. And that's really important because lots and lots and lots of real estate is contract, right? It's like
Hmm.
we talked about this last time, but in real estate, you make money on the buy, you don't make money on the sell. That's a really famous line that you'll hear from lots of people in real estate. And what that means is people spend a lot of time trying to get the right deal up front, whether that's the
Yeah.
right price, whether those are the right terms,
Mm.
um, and all those things are important. So being an attorney has been fantastic from that way. The other thing that's the other dimension that's important is I don't spend as much money on due diligence because I negotiate
Yeah.
all my own deals.
Hmm.
So it's easy.
And how important was that for you in the beginning? Like having that skill where
Oh,
you
that
maybe
was
you're low on cash, instead of having to outsource it, you can do that yourself.
totally, totally. You just it was huge, right? It's
Mm.
huge. It was important.
Mm. One thing that you mentioned to me as well in our first call was you had this moment where you said to yourself right before you went into the real estate industry and began this journey of yours. You said, I can do this. What was the that defining moment? Maybe you can talk a little bit about, what was that experience like for you when, because if I remember correctly, you saw someone or you met someone who had done something. Can you elaborate a little bit more in terms of what made you say, I'm going to do this and I can do this?
Yeah, yeah, that was easy. So I was playing golf. There's a bank in Cincinnati called Fifth Third Bank. They had a golf outing. I was on the golf range with this guy who was a former real estate broker turned developer. And again, these were
Mm.
the days of real estate. So Darren, you're younger than me. So you probably don't know what that was like, but it was a wild, it was a wild time. Like
Yeah, yeah.
you right, you talk to people and it was like it almost felt like in the closest I can get to it is like, let's say that it'd be like you talking to somebody and saying, hey, are you in the oil business? And
Mm.
they'd say, yeah, I'm in the oil business. And then you'd be like, what's that like? And he's like, well, I went over to that patch of grass over there. I put a shovel in the ground and there was a geyser. And then you're like, what? And then you're like, well,
Mm.
but that's just luck. And he's like, no, I went over to that patch of grass over there, stuck my shovel in the ground. There was another geyser. And you're starting to think to yourself, what in the world? Like I'm missing out on a lot. There's a lot of fear of there's a lot of FOMO.
Mm.
So I had that. So I was golfing with this guy. He was a broker, turned into a developer. And as he was talking, I was like, hey, what are you up to? He's like, oh, I'm doing this deal. And I'm like, oh, okay, cool. Like, tell me, describe it. And I was brand new. I didn't know much about real estate or really anything. But
Yeah.
then he would keep going. And you're like, well, how does that make sense? How did you go from being, this type of guy who had this background to someone who owned 6 shopping centers and you had just bought a liquor store in northern Kentucky? And I was like, there's
Mm.
something either I'm missing, maybe I don't have. I don't know. I don't know what I thought, but effectively, I thought to myself, "You're a pretty smart guy. Look at all that you're doing. I'm a pretty smart guy. I should be able to do what you're doing, given enough time and effort and energy."
Mm.
Um, Poorly timed, I'll tell you, Darren. Like very, very poorly timed. But that was the impetus to start because I felt like um, that was the moment. I thought to myself, if he can do it, I can do it, and I'm going to give it a shot.
That's amazing. And you're talking about how you were actually able to muster that self-belief of like, hey, if he can do it, I can do it. Do you think that is a belief that a lot of people struggle with today, like young people? Because a lot of young people today want to become entrepreneurs. I was at a course yesterday and I was talking to this young kid. He was saying, I want to be a businessman one day. I want to do this. But I noticed a sense of doubt in him. He didn't say it with a lot of confidence. Did you feel like you had that confidence, and do you think it's lacking in our
No, I definitely think I had the confidence. Like, I mean, you mentioned, for me, having education produces that, and
Mm.
it's not dispositive. You don't have to have it, but knowing that at any moment in time I could go back to being an attorney, God forbid I failed drastically, it was helpful, right? It gives you some sense of calm. But I will tell you, like my personal opinion, Darren, is like everybody shouldn't be an entrepreneur. Like
Mm.
there isn't the world is really big and there's lots of ways to be really successful. Entrepreneurship is a very, very, very hard road that requires a
Mm.
lot of sacrifice financially, personally, um,
Mm.
and a large I mean, just the numbers say a large number of entrepreneurs fail. So I want anybody who wants to be an entrepreneur should be an entrepreneur. That goes without saying. Like if you have that drive and you want that, you should go after it. But just saying, I just think that being an entrepreneur is its own unique sort of niche, and you got to be ready for it.
Well, speaking of entrepreneurship, you've mentioned that having a higher risk tolerance for you especially was key to your success, right? Can you maybe share a time when, for example, in the real estate, a deal didn't go as planned, and how you then mentally navigated through that setback, considering the fact that, as an entrepreneur, you're going to have those ups, you're going to have those lows, and how do you navigate when you're at a low, and how did that look like for you?
Yeah. So, the risk tolerance I can tell you, and then I'll get to the low point. So, risk tolerance. Here's what I mean by risk tolerance. My first deal I did was with a company called DaVita Dialysis, which I think I kind of told you about. DaVita Dialysis is a publicly traded dialysis company, and effectively during the recession, medical industry was probably the only industry doing deals. And because of the economics were all wonky, right? Nobody was doing deals. It just, nothing sort of made sense. But they needed spots because people still needed dialysis. To do a dialysis deal, it ended up being a good deal financially. But how did I get it? The risk tolerance for me was I basically went out, and there was a good friend of mine who was an agent. We went out and put contracts on 5 pieces of dirt that all could work for this tenant, right? So just throwing contracts out, trying to meet people, trying to get people to accept our offers. And then we basically went to this DaVita Dialysis as they were touring and said, hey, we have other nephrology docs looking at this site. Hey, are you interested in taking a look? Like, that takes guts. Like, I don't know, in retrospect, like who was I? But it certainly took guts, and it took a lot of risk because I'm putting money out for every single one of these contracts that get accepted, right? You put money out and you're sitting on the precipice of potentially not being able to move forward. So I think that's what I mean by risk tolerance. The other thing I would tell you is real estate in general has asymmetric risk. Like you do a deal until you reach some level, every single deal could take you down. I mean, that's just that's how real estate happens. It's like you have a small deal, then a bigger deal, then a bigger deal, then a bigger deal, then a bigger deal. And every one of those could hurt really, really, really bad. So I think my personal opinion is I think real estate has asymmetric risk. Your question about things that went wrong, I built a retail center in Tylersville Road, which is in Cincinnati, Ohio. This retail center was facing the wrong way, and I lost a lot of money. And,
what do you mean it was faced the wrong way?
Yeah, it's a great question. So this is a very basic but stupid lesson. So there's a stoplight, and almost invariably your building, if it's a retail center, it's typical, this was a 36,000 square foot retail building, should face the hard corner, right? So it should face the corner, and the light should be sort of in the armpit or facing the armpit of this building here. Yeah. And I built it where it was facing away from the corner. Why? Because I wanted more outlots. An outlot is basically a piece of dirt in front of a retail building that you could do like single tenant net lease deals. Like you could find a bank or a Dunkin' Donuts or whatever. And the truth of the matter is that killed the deal. Like it totally, it went from being a property that I wouldn't have been rich on, but could have been a very, very good property, to a property that just lost money because I built it the wrong way. And I had to, you take the lick, and you learn, and you just have to move forward. It's impossible to say it any other way. You just got to move forward.
And in terms of like how the size of this deal, probably, a lot smaller than what it would be for you today. But at that time, how significant was that deal and losing out on that for you?
It was a game changer. Like think about all the conversations I have outside of the real estate part, right? You're talking to your wife, right? We're starting a family. Yeah, it's really hard, man. Like, it was a deal that it's definitely the type of deal where I could have easily said, this isn't for me. I'm out. There just isn't any more to give financially, emotionally, spiritually. all these different factors, I was easily spent. I spent lots of waking or lots of nights lying awake thinking about how to save the deal, salvage it, make it. It was bad.
And how did you then get through it? How did you get through those sleepless nights? What drove you to keep going? What was it that made you think, I can keep going. I still got this.
That's a good question, Darren. I don't know. Maybe stupidity. Maybe I don't know. Like you, I don't know. It's like maybe you're a runner and you're at the end of you can't run another step. How do you keep going? Well, you just do, right? Like you just take the next step. It's like these iterative moments in your life where you just have to move forward. Because if you don't move forward, you fall down and you suffer. So I don't know. I just kind
So
of we just did it.
So it sounds like you were at this point where you couldn't, there was no alternative. That was the only option to keep going forward, right? Because you mentioned that, you were building a family at the time. And the reason I ask this is because, as an entrepreneur myself and having a network with a lot of entrepreneurs, very often they start businesses and after a year they fail and they think maybe I'm not cut out to be an entrepreneur, right? And they've already given up. In my circumstance, I give up a chief operating officer title to pursue entrepreneurships, and I've had my fair shares of highs and lows. And I think, I'm asking this because, obviously you're someone who's achieved that level of success. You've gone through those rough patches, and I'm just asking because I'm very curious to understand what your mind was like at that time, and you know, was it the fact that you just didn't have a choice, or was there something else driving you inside of you, right?
I would say for me, Darren, and that's the honest answer. Like I could, I don't know, self-aggrandize here and tell you that for me it was no choice.
Mm,
I
no
literally had to
choice.
make it work.
Mm.
I didn't have any other options if I wanted to continue to do what I was doing.
And since then, you've now been able to build up with it three companies.
Yeah, correct. So we have Kulkarni Properties, which is a real estate development company in the Midwest. So we have one thing we do really well, I think I told you, is we have lots of land positions. So we have hundreds of acres in the Midwest and are
Mm,
working on really interesting big opportunities. These are big box deals, apartment deals, lots of outlots. Very fortunate in that regard. We have Serenity Capital Management, which is basically the Florida-based arm of development here, and so the goal is to expand down here in Florida. And then what I'm most excited about is we have a tech company called Realty Dynamics, which basically aggregates all of this publicly available data here in Florida and puts it into
mhm,
one system whereby developers and other people can do all their due diligence or most of their due diligence up front. It's a
mhm.
huge time saver. It's a real value to their processes, and our hope is to make that a real software business. So
And this is
yeah, those are
something
the
that
two.
yeah, you sell this to other businesses then.
Correct. Yeah. Yeah.
Yeah,
Exactly.
awesome. And one thing I loved was that you expressed that you had your business was better than most other competitors. I think was it the software one or was it the real estate? Because I love that level of belief and when you do business, you obviously have to be able to think that you're going to outcompete everyone and just do a lot better there. So what do you think sets you apart in that competitive landscape?
Yeah. So it's good question. So on one particular, it's not an asset class. In one particular approach, I am better than almost everybody in my business, and that is buying a piece of property quickly in a short amount of time. Most developers are very risk averse, Darren. And so there's
Hmm.
two things. I think we talked about this. There's two things if you want to get into the real estate business to your listeners that you need. And I,
Hmm.
well, let me re-articulate. Three things you need. Number one, you need to have a higher risk tolerance than the next guy. And it goes
Hmm.
back to what I was talking about, right? Like when all the chips are down, the guy who ends up lasting the longest almost always wins in real estate. It's
Hmm.
hard to describe why, but again, there's a famous saying in real estate: if you hold on to a piece of land long enough, it'll be valuable. Like At
Mm.
some moment in time, something changes, and the investment you made makes it. So you have to have a higher risk tolerance. A, B, you have to work harder than your competitive set. So there's no replacement for working hard, right? There's no shortcut to like. And by the way, this is a hard lesson to learn because in real estate, like in all things, especially even the startup world that I'm starting to learn about, all you hear are these wild and crazy stories, right? You hear about this one guy who like raised $100 million, this other company that built $50 million in ARR in 4 days, or whatever silly. Or you hear in real estate, hey, I bought this property for $1 million, I sold it for $10 million, and it's easy to get caught in this idea that it just happens. It just nothing
Mm-hmm.
happens. It's all work, and you just have to work harder than the next guy. Um,
Mm.
and then the third thing is in real estate, the lesson I wish somebody would have taught me very early on is you need to do real estate in a place that's growing by
Mm.
population and by income. So
Mm.
if you're looking to get into real estate and your listeners are like, hey, how do I do this? You should have market knowledge. So, like, let's say you live in a small town and you want to do real estate. You can do real estate in a small town. That's great. But what I found is if you would do the same amount of work and time and effort and energy in a bigger town, in an area that does have people moving and has income growth, you're going to compound your wealth in a way that is it just is asymmetric again. For example, I started doing real estate in Cincinnati in 2007, 8, let's call it.
Mm-hmm. Mm-hmm.
If I would have started doing real estate in Tampa, Florida in 2008, the same thing, right? Just moved with my wife, no baggage, the exact same business. I wouldn't have changed
Mm.
anything about myself. I would have approached it the same way. I would have tried it the same way. 2008 here, let's say I would have done that in New York City, Raleigh, Durham, Seattle, Washington, Phoenix, Austin, or Cincinnati, Ohio, or Indianapolis, or even a smaller town, Marion, Indiana.
Mm.
All of those options end up producing wildly different net worths for me, like wildly.
Mm. Mm.
Um, and that's a mistake, right? So if you're going to be in my business, you should spend a lot of time thinking about where you're going to do it.
And in terms of deciding where you're going to do it, for those listeners that may be thinking, yeah, I want to get into this, and how can they figure out where to go? What variables can tell someone if, hey, this is a good area? What metrics, numbers should they look at?
Yeah, so super simple, right? Number one is population growth, and those statistics, at least here in the
Mm-hmm.
U.S., are pretty easily available. Number two, you look at IRS data or income data for growth. Those are super simple. So let's say that you can get to a spot where you understand the IRS data and the population data, the demographic data.
Mm.
Then you need to get in the weeds a little bit, right? Like you need to look at other things that matter, like trends, where big companies are moving, public infrastructure, public transportation, cost of living. But like, even if all you did was those two things, you do better than 85% of your competitors because
Mm.
that's all that matters. Real estate's an easy business and a hard business. There's no barrier of entry. You could do it, Darren. I did it. Your neighbor could do it. Everybody you talk to wants to be in real estate. They all love passive income, blah, blah, blah. Everybody loves it. The only barrier of entry is money. Real estate
Mm.
tends to be capital intensive and high
Mm.
risk. But
Mm.
um,
Yeah. So for someone then wanting to go into real estate, because I'm just reflecting now on your first deal, right? The first deal that you made, you told me a little bit about it. Can you share a little bit more about, what was the most rewarding aspect for you about that? And how has that feeling evolved for you over the years as you've continued to do more deals?
yeah, so what it ends up producing is like it's like using your phone. It's like this massive dopamine hit. It's like you feel everybody you talk to in real estate, I promise you, will tell you they're deal junkies. Every single one.
I was going to ask about that. You meant, yeah, a deal junkie.
Yeah, deal junkie. Every single person, and it doesn't matter if they're worth $10 billion or they're worth $100. You do a deal, all you want to do is the next deal. And
Hmm.
in fact, to the point where it's really hard over time, you don't even celebrate your wins. Like you
Hmm.
do, but you don't. Like
Hmm.
if I get a deal, for example, I'm working on a property right now. we have an LOI from a massively large business. Okay, let's call it. And they're going to build a small store, then a big store. This has been a negotiation that I've been involved in for, I don't know, 4 or 5, 6 months. All I've been doing is trying to figure out how to get this deal to where it is today. Literally yesterday, received the LOI. Today, that's old news, Darren. Boom, moving on.
Mm. And you spent 5, 6 months just closing this deal, and you're now just saying, okay, yesterday, and we're just moving on. So you closed.
That's what it is. Well, okay, so close means in this case, I got the LOI, so that starts the process of getting this deal done. But all of this emotional juice is gone, man. I don't know. It's like
yeah, it's more the chase, the hunt, right?
Totally.
And I think you can almost call it the deal junkie mindset in a sense, right? Where because I wanted to bring this up considering the fact that on our last call you mentioned you described yourself as a deal junkie, right? Where you said that it's more about the hunt that excites you. Could you elaborate a little bit more about what exactly about that hunt excites you so much? Is it the thrill of the negotiation? Is it something else? What part of that excites you the most?
Yeah, it's a good question. I haven't introspected on which piece of the hunt is attractive. I think it's honestly, I liken it to dating. Like that's how I see it. Like I don't know if you're engaged, got a girlfriend or married or whatever, Darren, but like again, in my younger days when I was out on the town trying to find, that's what it was. You always wanted to go out and it was like the thrill of the chase. I wanted to put my best foot forward out. I wanted to, in the case of real estate, I want to go after the best properties. I want to control them. I want to talk to tenants. I want to get the most amount of rent. I want to consummate the deal. And then when it's done, I'm moving on to the next property. So I don't know. I think it's a little bit of everything. It's a good question, but I think it's everything.
Awesome. And in terms of the properties that you typically work on, because you mentioned you focus heavily on land deals, right?
We do, yeah.
Yeah. So what drew you into that niche in real estate? And I guess when you actually let's start there actually. Yeah. What drew you into that?
Well, the biggest thing that I don't know, it's like a reductive. I think the reason that we do land deals is because land deals are what we can do that we're able to be competitive for. So I don't know, let's take any asset class, self-storage or multifamily or industrial. There are massive developers doing every single one of those things day in, day out, right? They got I was talking to actually a company based out of Miami. This gives you some example of just how robust a marketplace there is. So this is a pretty large multifamily group, and they have a team of analysts down in Miami whose job it is. This is a true story. Now I don't know if they're actually doing this, but this came from somebody I trust who's in a position of who would know. He said that in his company, they have this team of analysts that underwrite every single available multifamily deal in the United States, right? So if it's available and if it's marketed for sale, this team of analysts underwrites that deal. Can you just imagine how good they are, I guess, at understanding multifamily deals, understanding real estate? So it's very hard for me to find value like competing with a firm like that. I just can't. So what I do is I come in early, right? So land is hard, land is risky, and it takes a lot of time, right? And for most development companies, they're risk averse, but more importantly, their capital needs a return. So they're not able to, it's really hard for them to place capital today and then make a return on it 7 years from today or 5 years or 3 years if that's what it takes to get a property entitled. And they're willing to pay up for it. So that's their business, right? They come in after you've done all the work and they say, hey, let me buy this property from you. Fine. But, for us, we have to come in early and we have to come in very, very quickly because even the land space, it's competitive, right? Good pieces of land have lots of opportunities for buyers. But we come in, we say, okay, if everybody's closing in 120 days, we'll close in 45 days. If they're paying you X, we're going to pay you 0.9X. But we're closing in 45 days. And,
Mm.
we win more than we lose, but that's our model.
You mentioned in our last call, you also mentioned forming relationships with clients through land purchases, and I think if I remember correctly, that was one of the strategies that you used to close the deals. So how do you approach building long-term relationships with clients, and what role does that play? That level of trust really play in your success?
I think you hit the nail on the head. It's all about trust. When we meet with people, our pitch is really simple, right? Like, hey, I'm Shree. I'm a decision maker. I'm the decision maker. And if we strike this deal, you know that you have a deal because I'm
Mm.
going to do what I say I'm going to do.
Mm.
That's it.
Mm.
And I think that helps
Mm.
because at the end of the day, to your point, that's when most people, like, all we're looking for in life is a connection. And a little bit of a connection is better than no. Now, granted, if somebody is twice my price, that's a deal I lose. But if I'm
Mm.
competitive, that's a deal I win.
So a lot of it also comes back to values, I suppose, right? Like integrity, trust, these type of things. What would you say, if you're happy to share, are some of your most important values that you hold dear?
Most important values. It's a good question. So I think in relation, so I think I can kind of break this up into I don't know, let's call it parts of my business. So the most important value I think is we want to be buyers of integrity. So like I'm not putting 100 offers out there. Like there's some people who put 100 offers out there. I don't want to put
Mm.
100 offers out. I want to put an offer and I want it to mean something. That doesn't mean I'm going to close every time, Darren, because that just isn't the reality of real estate. But it means that I'm more likely than the next guy to do what I say I'm going to do. And I want that to be meaningful. The other thing that I value, and this is a small thing, but I make sure that I communicate.
Mm.
It's super easy in real estate to get, like, and for people that this doesn't even make sense, but you'll have brokers, you'll have buyers, you'll have sellers. They don't answer their phones. They don't
Mm.
talk about where they are in the process. I'm the opposite. You may even get that from this podcast, but I don't have any issue talking or communicating with people that we end up dealing with. So I don't know. We those are probably the big ones. Like we just want to be good, upstanding real estate developers and do what we say we're going to do. Pretty simple.
Mm. Mm. I think that's very important as well. I mean, when you do business with someone, it's like, I think it really applies to a lot of different industries, right? Where when you do something with focus and intent, you have a lot higher success, right? Like part of my work on the side is helping youth get jobs. One of the strategies that they would always use is they would write the same cover letter. They would write one cover letter and one CV, and they'll just send it out to 100 different companies, right? And pray they get an interview. And I'm like, you would have a lot higher success if you actually identify what skills you have, what you're good at, and then looking at what jobs match those skills that you have, and then really going all in on a couple of jobs, and really just trying to secure that interview so that you can then sell yourself in. But it sounds like you're approaching it in a similar way, right? Where you have more emphasis on one and strong communication, and instead of trying to go for 100 different offers.
Yeah, dude, I think that's exactly right, Darren. I think you hit the nail on the head, and I think what you said is very profound. Even as somebody who hires people, that's the way I hire people. Like you could go through the
Mm.
process, and then it's luck of the draw, right? Maybe I see your resume, maybe you come in for an interview, maybe you get hired, and for that person, that strategy worked. But at the end of the day, if you pick two or three definitive targets, and going back to this whole concept of doing the work, it's all about the work. Like, what's the
Mm.
work in getting a job? There's
Mm.
work. It's do
Mm.
the resume. It's make the calls. It's make the follow up. It's
Yeah.
it's doing whatever it takes to get the job, and that's all
Mm.
it is. And I feel like that's all life is. I mean,
Hmm.
everything can be boiled down to those simple principles. If you want something, you have to go get it because nobody is going to give it to you.
I came across a video of someone asking another entrepreneur whether his generation or our generation is harder working. And I wanted to ask you this. Whose generation is harder working? Your generation or my generation?
Not to sound like an old guy, but I think our generation is harder working than your generation for sure. Here's why though, and I feel like it's totally not right. Like we're not endemically harder working. We're the same people that you are, like our kids will be. I just think that what's valuable has changed, and this perception of value has changed. So like if let me give you an example. My oldest is 15 and I have all the way to an 8-year-old. So we have a 15, 14 and a 12-year-old. I'm hoping, but I don't know that this will be the case, but so much of what they value exists out of this real world and in the social media space. So they like kids today value things like acknowledgement from their peers. They value this. They value the connectivity that they get on Snapchat or Instagram. They value relating to each other, when they go to dinner or when they go out. Like they just get so much more from that I just don't think that the things that were important are important. So it doesn't take a lot of work. I mean, and they may say opposite. They may be like, "Hey, Dad," or whoever, you're an old fuddy duddy, and it's really hard work to be really great at being this person that you're having an online persona. But I just don't think it's hard to be that person. I think it's hard to work hard. So that's why. Nothing other than that. I just think that the values are shifting away from the things that were important, and there's a whole different world out there.
Mm-hmm. And how do you think, if possible, you could get those values back? How can a young person focus more on some of the things you're talking about, like trying to is it just distancing themselves from social media and all of these things, or how would they go about that to try and incorporate that ethic of hard work?
Well, okay, so it's a great question. I don't necessarily think, Darren, that it's a great idea to distance themselves from that. Here's why. So I know it bothers me that the world is the way it is. However, I do think there's a couple of 3 or 4 macro trends, which I don't know when they play out, but they are going to play out at some moment in time. I think it's impossible to undervalue what's happening with AI. It's possible, like there's 2 different versions of that, right? One version says it's going to create more jobs than it takes. And I think the other version, if you just boiled it down very simply, is AI is going to take more jobs than it creates, right? It's going to displace many more people. You're talking about these level 1 customer service jobs. You're talking about tech support. You're just talking about all these different things that already are getting cut. And by the way, the stock market is showing this, right? They're publicly traded companies that are losing, like their market cap has gone down by 20-25% because their business is to provide call centers, and the call center part of what the future looks like, you can't forecast that into the future. So like, number one, so if it turns out that AI is as destructive or sort of reductionary in workforces, I think it's going to be. And then I think that there's going to be in the next 50, 60 years a need for a universal basic income, just because I don't know how people live. I think what ends up being valuable in a world where all of the things that we do, or most of the things that we do, end up being done in a way that's better and more productive. I just think that the traits that we're going to value aren't going to be the ones that we're talking about today. Like, I don't think that being, I just don't think that. I just think that, maybe my grandkids will, it's going to be way more important to be able to disseminate information and have really awesome conversations online, or be able to function in this metaverse, right? And build universes out there in a way that I don't even understand. So I guess it's a long-winded answer. Sorry to go down that rabbit hole with you, Darren, but you asked, what would I change? I don't know that I would change. I just think the world is changing.
I think it's fascinating, your perspective. And I think, when it comes to that universal basic income, right, where a lot of trades won't be as important due to the fact that AI might take over a lot of the jobs, is a possible reality, right? And something that I've thought about as well. So in terms of, from your perspective at least, right, you've been in real estate, you're in this niche, you're in this industry. For someone starting out, 16, 17, 18, 19 years old, in terms of an industry to go into, based on the current trends and the way the future is developing, and our society as well, what niche or what industry would you recommend them to go into? And, can be biased, but if you had to like think broad, what would you pick?
You're talking about within real estate or any industry in the whole
Any,
world?
yeah, any for someone young starting out now, considering the trends, what industry would you recommend them to go into, or at least check out?
That's a great question. So I think you have to make certain assumptions, but let's say you assume that that property rights continue to hold, right? Like they continue to be an important piece of the fabric of our society, constitutionally, whatever the case may be here. I think that going into real estate makes a ton of sense because now,
Mm,
what the hard part is going to be is like what type of real estate holds water. So, do I
mm,
think in 60 years you want to own parking garages and parking lots? No, I just don't. Do I think that if right, so there's some small idiosyncrasies. Do I think cities become more compact? I do. Do I think climate change changes where people end up living over the next century? Absolutely. And a century seems like a long time, but it's just, relative to real estate, it's just not. There are
mm,
families that have owned property for hundreds of years. So,
mm,
like, I think what real estate ends up changing with technology and how the world changes. But I do think real estate, assuming property rights continue to be a really important piece of how we function, I think real estate's
mm,
fantastic. I also do think the service business is going to continue to be an extraordinary opportunity for people, and you're seeing that
mm,
like this reduction or this increase in the blue collar workforce, people foregoing going to a 4-year degree, and there's a lot of talk about that, right? Like number one, is it worth it? Is the value that
mm,
college is delivering to you equivalent to how much you're paying or how much debt you're taking on or what impact that has for you on the future? And I do think people are noticing now. You go to a 2-year
mm,
degree, you become a plumber, pipe fitter, HVAC technician, electrician, all these different things. You can earn a very, very nice living. And frankly, if you think about it from a business perspective, this is how you know there's an opportunity. All this private equity money, they're trying to flow into these service-based businesses and roll these all up because, right, it's easy to increase margin, right? There's a lack of people doing it. And at the end of the day, people like me have zero idea how to do the work, right? And my
mm,
kids are going to have
mm,
even less idea how to do the work. So it, let's call real estate one. I would say in some sort of service based business where the labor, like the labor of your hands, ends up being really important because it's harder for me to see a world where AI display like yes, it might be able to diagnose your AC, like it could
mm.
say, oh, here's the issue, right?
Yeah,
But it still
yeah,
needs to be fixed. Somebody's got to do the work.
yes. So we looked a little bit into the future now and what you would recommend the younger generation to kind of go into. You mentioned real estate and service-based businesses. So what about yourself? Let's look at you. So I want to approach this from two angles. So the first is if you grew up today, would you still pick real estate?
Probably not. No,
What would you
I
pick?
wouldn't. You know what I would probably do is I'd probably work as an attorney
Uh-huh.
and develop a really good understanding of whatever. Like I'm an entrepreneur by heart, right? Like you talked about this kid that you were like. If you have it in your heart, it's in your heart. What stopped me
Mm,
from being an attorney up front was this concept of billing in every 6 minute increments. Like that's a terrible. That's for me. That's an absolute anathema. I can't. I
mm,
couldn't stand. But if I had to do it again, I'd learn something very specific and become very good at it, and then use that. I'm sure translate that into some sort of business because it's hard starting a business sort of from scratch, not knowing much about it, and trying to become good at
mm.
something. Like you should learn on somebody else's dime. So that's probably what I would do.
Interesting. And in terms of what piece, if there was one piece of advice you could give yourself when you first started out, or, really anything, what would it be? To your
Um,
younger self, that is.
yeah, I would have told myself that the world is large. Like again,
Mm,
my biggest regret is not moving to a better location because all things about me are the same. Whether I'm here in
mm,
Tampa, whether I'm in the Midwest, or Barcelona, Spain, or
mm,
Australia, I, I can do what I do. Now there like there are things that would prevent me from doing the same thing in Australia and Europe as it is here. Like, but I guess my point is the world's a big place, and I should have thought tactically in a very sophisticated way about where I wanted to be and how I wanted to approach my career, and then made decisions based on that. And I didn't. I did it like almost everyone does. They wake up, they look at the corner down the street, and they say, "Oh, hey, this corner's for sale. That's interesting. How much is it? Oh, okay." Like that's how people approach real estate because it's all comfort. It's all based on what they know, and they say real estate's very local. That to me, based on my experience, that's the wrong way.
And in what way is that the wrong way?
Yeah, just to wake up and like what's the classic example that, well, not classic, but the way people sort of describe this idea. Let's say that you lose your keys and it's dark outside. Doing real estate in the city you live in, it to me is the equivalent of looking for your keys under the one street lamp, right? Like
I see. Okay, right? Yeah. I get it. It's interesting. Yeah. So yeah, expanding. But then would you then would you just move to another city, or would you do deals in other cities?
Yeah, so I think that it's doing real estate's a very local business, right? So it could be very risky and very scary to do business in other cities without true knowledge. So I really do believe that the way to do it is if you're going to be the one doing it, you have to move, right? You can do deals in Tampa, but then you have to move, or you get big enough to where you have resources who understand that market the way that you understand your own market. And that happens all the time, right? Clearly there are national real estate firms that do phenomenally. But where you would start, like that's the question, right? What advice would I give myself? I would go to a city personally where I was able to use my limited resources and brain power and time and effort and energy to build my career.
So right now, you have, as you mentioned, you got three businesses. And you mentioned that it was the software company that you're the most excited about. What is your role in terms of growing that business? How do you go about, trying to expand it? What strategies do you use there?
Yeah, great question. So, I mean, the truth of the matter is the idea was mine, and I financed the business, but I'm probably the least important person in this business. Like I love it. I'm fascinated by it. I'm interested in it, but I've got a great team. Like I've got he's a PhD from University of Florida. He's leading the tech side. And then my brother actually is leading the sales side. And they're much more important to grow in that business than I am, right? Like I'm still busy on the real estate side and things, but we have a phenomenal team. I've got a CFO and he spends a lot of time thinking about the finances of it.
So in terms of marketing as well, you mentioned that you have a marketing manager. Is that for that company or is that for your real estate?
Yeah, so that's for the real estate. That's for the software business. The marketing
software
person, that's all they do. Yeah, because real estate there just isn't much marketing to do.
I was curious about that, so I just wanted to double check because for real estate, typically you're attracting it's a different target audience. But then for that business, how important has that marketing been for you? How important generally is marketing yourself in terms of growing yourself, your business? How important is that for businesses as well as yourself in marketing in general?
Yeah. I think it's industry specific, Darren. I think that the software business requires it just because it's that type of business. Even though our business is a B2B business, but that's just how people receive information, right? In the world of real estate is it's a non-fungible product. So if you're McDonald's and you want to be at a corner, you want to be at the corner, right? Doesn't matter who owns it. That's the location that makes sense for you. Maybe you could go next door, but you're not going 10 minutes down the street because it's the same piece of real estate. So all things being equal, it's not that important. But I will tell you, again, I'm not like, I'm 44 years old, but what I'm seeing change is like there are personalities in real estate. Like the one that's probably the most famous that I know, you probably have heard of a guy named Grant Cardone. He's a very famous syndicator for multifamily deals. But and I don't know his business. I don't know him. I don't think about him. But you just wonder how much of his success in raising money is based on his public profile. So is it a value generator for someone in real estate? It could be, right? I'm not great at it, but certainly I think I think that's going to be a much larger piece of how things move forward in the future, for sure.
And what about you? I mean, what's next for you and Kulkarni Properties? Are there any new markets or opportunities that you're excited to explore in the coming years? Is there anything that what's next for you?
Great question. So for Kulkarni Properties, like I mentioned, we have like 2 or 3 large development deals. I'm talking one's a 36-acre piece, one's 75 acres, and one's 40 acres, and they're all going to be big box, mixed use, large developments. So these developments take years to come to fruition. So I hope to take those to the finish line, right? And if we were able to do that, those are massive opportunities for us. And I think at that moment in time, we could kind of figure out what else we're going to do. I'm partners in Cincinnati in the largest mixed use project there. It's an innovation district in Cincy. My hope is in the next 6 years that kicks off, which could be it's a 40-acre parcel, and then there's a meaningful development opportunity there. Mm-hmm. And then we have stuff down here in Florida. So, like, I guess I don't know. Maybe the easy answer to that is just blocking and tackling, Darren. We're just trying to get the deals done that we have and keep moving on down the road.
Awesome. Well, because we got to wrap up now soon. One final question for you: if there is one thing that you'd like to say to the audience or to young entrepreneurs today wanting to start out, what would it be?
I don't know. I want to repeat the cliche that people say, and then I would add a second thing. The cliche is it's always going to take twice as long, and it's going to take twice as much money. That is absolutely true, right? And it's cliche because you hear it and everybody says it, and you're like, oh, whatever. But that's the truth. And the second thing I would tell entrepreneurs is whatever you decide to do, like it doesn't matter what field, you have to see that through. Like it's so easy, and Darren, you know this from your background, it's so easy to hit a roadblock and stop. It's just easy. I don't know how to describe it. Like you have to see it through. Now, right? The nuance is you can't go chase windmills either, right? Like at some moment in time, you have to make an educated decision as to whether the business that you're starting, the entrepreneurship track that you have is the right one. But there are so many ups and downs. I think 90% of success is grit. Like you have to give yourself the opportunity to be successful and persevere through lots and lots and lots of no's, negatives. Sorry, the third thing, because it made me think is I think that people take advice from people. I think it's to me, and this is probably counterintuitive or counter, what's out there, but be very careful about who you listen to, because every time I talk to somebody about whatever I'm interested in, it's very hard because we're all human beings. Like we're used to taking this information. It's very hard to get swayed. And frankly, if you use it as a test, like if you talk to 100 people and everybody's like, this is a terrible business, you shouldn't do it, and you still want to do it, that's probably the best way that you're going to know you should be doing that. Right? So those are my 3. Sorry, Darren.
That's interesting. No, that's interesting. I almost want to explore the last one. But yeah, we'll wrap it up there. Shree, thank you so much for joining the What It Takes podcast. Really appreciate it, man. Thank you.
Thanks, Darren. Thanks, Darren, so much, man. I appreciate it.